twice now. Oh, now I'm live. Okay, good. Here we go. Morning, everyone. Welcome to our session. Appreciate your patience. I apologize. Uh, good morning, everyone. Welcome, welcome, welcome. How's everybody doing? Well, I was trying to fix a problem and I ended up creating more. Uh, it's always the case, isn't it? I need a tech person. Uh, all the old traders have a tech guy. I need a tech guy or lady. So, welcome everyone to our live session. Thanks for those on YouTube who are being patient. Really appreciate it. LC is working on a project that does not allow him to communicate these days. He's around, he's just not. He works on sensitive stuff, so. All right, let's get to it while we're here and while we got everything working. So, our overnight inventory is a little bit short because the bulk of the time and volume traded is underneath yesterday's close. Now, here's the thing. Can we hold these lows? Hey, Grant. Can we hold these lows? You know, the market's looking for a low, and I'm using 55.84 as our level, and we keep doing this back and forth over it. Hopefully that gives us some price stability. I'm really, really hoping that gives us some price stability. We want the market to go sideways for a while and then get back up in this 56.20. It's going to be a hard road because, of course, the macro is changing and people are trying to figure out how to navigate this market, especially in a longer term. Luckily for those people, they get paid to manage money so they can take their time. We, on the other hand, have a sort of a different point of view, right? We're trying to day trade this, right? So let's go take a look and see what's shaking in the kitchen here this morning. The price action hasn't been too bad. A lot of traders say that they don't like trading the overnight, but I tell you, there were some good trades in the overnight session. What we do is we use a 1-minute candle chart. And let me just make sure because I had to reboot. I want to make sure I've got VWAP anchored in the right spot. Yeah, okay. So I've got VWAP at 55.90. And the trades that we've been looking at and that we took, we like the look below and fail trade, where the market comes down, looks below a level, fails, rotates back up. We buy a little bit, put our stop at that level, and then sell into that upward rotation. right? So that's what we're looking for. We like that kind of trade. That's a tougher trade in markets that are trending down. So what we like to do is take the look above and fail, and it worked really nicely. Where was it that it worked really nicely? It was, oh yeah, it was here. These look above and fails worked really nicely, where we popped up, came down, popped up, came down. And those are nice shorts because what you do is you take the short when it comes back in, you short the back end of the move, not the front end of the move, right? So if you short the back end of that move, that means you're not shorting here, you wait till the market comes in, right? And you take the short, put your stop up here. Now, you put some buy orders down here. So if the market doesn't hit those buy orders, then you know there's no supply, right? If the market has no supply, it's going to rotate up like it did here. You see how it stopped? It would have stopped me out on this candle, right? And then if I retook the trade again and I was shorting, say, 82 against 84, right? I'm looking for 77, 76 as the market rotates lower. Okay. Thanks, Elliot, for posting that. Much appreciated. So that's why I have these zones. If you're in our trading room at MicroE Futures, we explain why they work, right? And how it shows the business of the trade. The business of the trade is very important because trades are either based on no supply, right? A lack of supply or an abundance of supply. Those are really the only two reasons that a trade's going to work. So we craft our execution strategy around this business. This also helps keep our risk manageable, right? So when you're managing risk, you can really know, like say I'm looking to take a short here. Let's use this as an example, right? Let's just go in and check this out. So what I like to do myself is I like to wait till the market goes above the level and then comes back down. When it comes back down underneath that level, right? When it comes back underneath that level, that's when I'll initiate the short, right? Right? If you're trying to preemptively short, right? If you're trying to preemptively short that level, your stop will be right above that level. Here's the thing, because if the market starts offering above that level, it means that the sellers don't have to compete. When the sellers don't have to compete, they're going to raise prices, right? Keep that in mind. Let's open up the old trading software here. Ralphie, as I've told you many times, what are you supposed to be watching when you initiate the short? So say I was short here. Say I was short at 98. What's the most important thing, Ralphie? Right? There's nothing else. What I'm teaching you, I don't do anything different than what I'm teaching you. Okay? I'm watching that offer. If that offer gets above this white line, I know I'm in trouble. can it go over this level? If not, I can trade in the trade. Yeah, you can stay in the trade as long as the market isn't offering over that level, right? So if the market is offering underneath that level, it means that people are competing. Because you guys got to remember, it's a market. When people compete, price goes down. When sellers compete, price goes down. When sellers don't have to compete, when there are buyers just coming in, just walking in off the street, that's order flow, right? So there's nothing magic that I'm looking at. I'm looking at the same thing you are. I'm watching. See, look, watch, check it out. See how it's offering above that now, Ralphie? So what you're looking for is the seller who sold here or the group of sellers that sold here. You want them to initiate again and push that offer underneath 99, 98. If they can't, what's the point of being short if nobody wants to put the market on sale? Think about it that way. Do I really want to short when there's no sale? That's when you want to be long. You want to be long when the offer is moving up. You want to be short when the offer is moving down. There's nothing magical. There's no secret order flow tool that I use, right? It's just common sense. Just common sense, right? Simple common sense, right? So do you see how, but we're offering over 98. So if I was short under 98, how much room, how much risk do I want to spend on this trade, right? If there is no seller, because overnight inventory is short, if we remain above yesterday's close, that could bring some buying in. Look, look. So now the business reason for the short is gone. Should you still be in the short? It's very simple. If the business reason for the trade does not exist, why would you be in this trade? Right? Very simple. Right? So the seller is gone. So you lost your seller. You lost your backup if you're a short seller. Make sense? Everybody understand that concept? The offer is the holy grail. Why is that? He who has the lowest cost basis makes the rules, and they will offer product out in accordance, right? In accordance with the customers that come in. So now it's a little choppy here, right? We're in distribution. You can see that we have a little bit of a rotation going on here. We know that there are sellers here. They were here in the spike when the price spiked all the way from 84 all the way up to 5602. That's when the sellers stepped in, right? Boom, boom, boom. Good morning, Texas. So now when it's doing this, Ralphie, what do? Right? Now you got to chill, right? If you're looking for another look above and fail, remember when we got down here, we ran out of selling. So if you're going to look for that trade again, wait for the next candle, right? And as we get close to the open, I don't like trading right near the open, before the open, right? See, it gets a little jumpy, right? Gets a little frisky. We as retail traders, really the big thing is to protect our money, folks. The profits will come. And I know that sounds like crap. And I know you've heard it. And I know you're tired of hearing it because you've spent all this time sitting in front of the screens, right? I get it. I get it, right? But just, I promise you, if you work through the frustration, right, and just keep things simple, things will get better, right? So again, we've got a rotation, right? There's a seller at 5603. There are, sorry, multiple sellers at 5603. So what do? They start price competing. Boom, boom, boom. That is the basis for a short. Right? I like to short the back end of the move, not the front end of the move. The front end of the move is for wholesalers to sell size into. The back end of the move tells me that there's a seller. And I like to identify a seller before shorting. If there is no seller, why the hell would you short? It's got to go lower. That doesn't work. That's not business. If you understand anything about supply and demand, right? And thanks everyone for joining us on YouTube. Sorry about the little technical glitch this morning. I was trying to make everybody happy. Sometimes it doesn't work. All right, coming down. Let's go test VWAP and give it a good shot in the head, see what it does. Overnight point of controls up here. Right now, let's see if they front run that VWAP cover. If you're short off the 5600, if we keep going underneath VWAP, we're looking for 5584, which is coincidentally where the stops of W are. Thanks, Brian. Looking for 84 and a half. A little bit of responsive buying. I don't like trading in the middle. Never seems to work out for me. Let's see what happens here. If we're moving up over VWAP, you'll be looking for sellers here, right underneath 5,600. Just let the market open up, and it's only been a couple of minutes. Let it warm up. This is a little choppy. I don't see a clear trade, so hold on to your wallets. As we get down to 84 and a half, I want to see what the reaction is. This market is still looking for a bottom, okay? The process of price discovery can sometimes be violent, right? This market is not normal. It's changed ever since the implementations or the announcements of all the economic news like tariffs and things like that. So while it is trying to work things out, we have something called price discovery. And price discovery is something that you should just really, really, you want to treat price discovery with respect. Okay. Because respecting your capital is the first step in actually growing your capital. Now, I know that sounds preachy, but it's true. If we, one thing I do know, if we take the A high, it's going to run some stops and your target will be 5603. That is a pure market profile trade. How much zip we have will depend on where those sellers initiate. See, they're coming in right around that 98 area, right? You can see them. They're clipping in right about here, right in this area. So, in order for the market to get higher, you need the order flow to come in to clean out those sellers, right? So you watch the offer, and when the market gets up to 98, watch. The offer starts moving. Now we've cleaned that seller out, but only for a brief moment because they just reloaded, right? That's what creates this chop. That is very hard to trade because of the unpredictable nature of what's going to happen. That's why we really, really want to stick to the trades. Like that wasn't a look above and fail. It was a fail to look above. And sometimes traders are fast and they can catch that 55.98 short. I wasn't. I wasn't fast enough to catch it. Not today. Now, I'm looking for 84 and a half. Let's see what it does when we get down there. I do not think it's odd when we're in price exploration for the market to go test the overnight low, right? That is not, it's not an odd thing at all. It's not pretty price action. It's okay, just wait. That's the good thing about a 23-hour trading day. If you don't like the way it's trading now, just wait. It'll change. Right? That's the good thing about markets. You don't like the price action? Don't worry. It'll change. Right? Give it 20 minutes. Oh, I could use another cup of coffee. So now we have some fairly big rotations, right? Around 55.85 to 55.96, like 10-point rotations. I think yesterday was the first day that we held the previous day low in a while, you know. So from a settlement point of view, that's good. 55.84 is a big level for me. If we accept over 55.84, right, it tells me that they don't need to sell under 84 anymore, right? So if I was a large trader, I'd be front running 84 and then selling into the 95s and the 90s, right? The fact that the market is bid 84 and here they front ran it, there's the bid, there's the front run, there's the bid. You can see it. There's the bid, there's the bid, there's the bid, and this is when they front ran that bid. So that's good for position traders. Now, let me be completely 100% honest with you. Building a position in a market that's got a 10-point rotation range is not for new traders. That is not for amateurs, okay? You've got to sell into strength, right? And work that on both sides like a market maker would. Because if you don't, and you don't sell into strength, the next candle is going to come right back down. You've seen it here now, right? You really, really want to you got to manage your risk. What kind of market is it? What kind of tools do I need to trade this particular market? Right? Like when a mechanic goes and goes, okay, this is I need a torque wrench for this, or I need a screwdriver for that. We have different tools in our trading box, but they're all variations of the look above and fail and the look below and fail, right? How you manage the trade, like say I was long off of VWAP, right? If I was long 91, 91, 92, I'd be selling here, right? I'd be selling into the 94s because I can see a seller, right? If it goes higher, great. right? Then you can sell your runners higher. But always make sure you pay yourself, right? Always make sure you pay yourself. 5,600 working nicely. Now, if we stay over 98, that's what I'm. See, there was a seller right here, right? There was a group of sellers. They were all competing at 98. Do they have to compete again? Was that just one small burst of buying? Because, like I posted earlier, one big candle can be caused by just one order. And if there's no follow through in that order, that's how people get caught chasing price. Because the candle moves, you jump on, and then there's no follow through in the second candle, like we're seeing right now. Right? Very important. And it's not easy. It's like this kind of price action is soul destroying if you don't understand what's going on. Because you go long, you get stopped out. You go short, you get stopped out. You go long. After a while, it's like you're just standing there, just getting punched in the face, right? Very frustrating, right? Now I'm looking for that 84 and a half again. If we do a look below and fail of 55.84, and this market holds going into tomorrow, you're looking for 56.20 as your first upper target for longer term traders, right? But it might be very ugly getting there, okay? Right? So don't look for it to be pretty, right? It's going to be ugly and it's going to be, you know, trading this market, we're going to take some cuts and bruises. Thanks, S-Pill. I just muted everybody. So now we're looking down at that 84 half. What do we do? Right? Do you buy it right away? No, just wait. Look, there's a seller. They showed themselves, right? They're right there. The top of the candle is where the sellers initiate. So under 84 half, let's go price explore, right? Let's go find where the buyers are. That's what we're doing right now. We got to go find buying, right? So they'll sell the market down and I'll be looking for 75, 76. Came right to the time point of control. Now, if you do a look below and fail, like say you're long 85, 85 against 84 and a half, well, you're stopped out, right? Too early. That happens, right? There's no shame in that. Now we know the sellers are here. When you get stopped out of a long, you know where the seller is. I mean, I was saying yesterday, anybody ever been in a trade and you're long and it goes down and it comes right back to the point where you got in long and then it sells off? That's because everybody else is trapped right where you are. Right? Same with shorting, right? We all tend to make the same mistakes, right? We all tend to make the same mistakes. I am not above the law of screwing up, right? I've just learned to wait for my trade and I've screwed up so many times. The only thing is I don't blow up accounts because I've been taught to respect capital. Right? So I take 2, 3 trades on the micro when I start my trading day. And if I start losing money on 3 trades, I have to stop trading and reassess. You just can't keep going and going and going, right? It's not like an endurance sport. It's a business. So that never say die mentality, that should apply to your risk management, right? I apologize. I'm preaching a lot in this market. And unfortunately I have to because I'm getting messages from people on X and YouTube and things like that that are, there's it's sad because people are losing money. So it's good that I, at least talk about this. We're all in the same boat with this market, right? No one is like a super trader, right? And if you are, you're on a desk somewhere at Goldman or at a fund, and everybody makes mistakes, right? So when I took that look above and fail, I stopped myself out right away, right? My stop was in. I scratched, right? Yeah. Yeah. When a guy like Cypress is complaining, right, that guy will trade circles around anybody I know. And I know a lot of people. He's one of the sharpest traders on the West Coast, you know. Thanks, Caution. The trade should make sense. The other thing too, folks, is look, I'm from Saskatchewan, right? A hero ain't nothing but a sandwich. Okay. There are no heroes in finance. If the price action is too busy or too choppy for your liking, wait. You don't have to trade, right? I'm from Regina, RK. Nice to see another flatlander, right? So, you know, there are no heroes in trading. There'll be a lot of times where I'll go, you know what? I don't know what's going on. I'm just going to sit and watch. There's no shame in that, right? That's smart business. Oh, this thing's taking a while to find out its bottom, isn't it? A couple of micros with larger stops with these big candles, it is necessary, right? And also, you can close the trade out quickly if it's not working because you know it's going to pull back. You're right? This volatility, you have to adjust the way we do business. Here's the thing: stops are a business expense. They give us information and they also provide insurance to our account. Well, this thing lost the bid. Like I said, if we stay under 76, we're going to rotate lower. Look for it to lift. When it starts to lift, right? That's why people will sell into that lift, right? And they'll short into that, and you'll put your stop above the top of that candle, right? The problem is in this market, these candles are huge, and the price is volatile. So, say I'm short 75 and it starts lifting above 76 and 3/4, I'm going to have to stop myself out. I have been in the business for 33 years. I have been in the business for 33 years. And what I used to do is I used to be the liquidating trader for investors when they took companies public. So I fed market makers order flow all day. And I've worked on 200 IPOs from penny stock up to NASDAQ. And I've always been the liquidating trader. I've been the guy who always controls the supply. See, there's some bids down there at 4 and 3 3/4. Yeah, 33 years, 200 deals, about 25 crews I've worked with. Bunch of dead partners from heart attacks and poor living. That's the name of the book I'm working on. If I ever finish the book, hopefully I finish the book before people get tired of reading it. I'm going to try and work on that this month. I don't trade equities. I distribute equities. I trade futures. I don't trade equities. I like futures because there's no there's no stock borrowing fees, um, no short sale restrictions. You just click to short, cheap margin, and it's just one thing to trade every day. I like simplicity. I'm an old guy. I'm 56. We're looking for 69 right now as this thing kind of tumbles lower a little bit. So I like to trade futures because I get to trade one thing every day. I only trade the ES. I make my daily bread or I don't. I know the market really, really well. I know when I should touch it and I know when I should stay the hell away. So it's all risk management for me. I don't like trading a different stock every day. And to be honestly truthful, I do not like trading stocks if I'm not in control of the float. I am used to being in control and managing size. I am used to having the lowest cost basis, right? So, like when you did my job, your clients would ask you, what was the volume? How much did I sell? Yeah, we'll look for a poor high and a poor low. Did we have a poor low in the overnight? No, we did not. Poor high and poor lows are market profile, and they just show you where the buying and selling competition is. A poor low means that there's buying competition and the market doesn't get to develop its excess. This is excess market profile right here, right? So a poor low would be like one tick of excess and none of this to be there, right? But when you have excess, what do the market profile guys say? The auction concludes in a natural manner, right? When you have a poor low, you got boom, big bids. The seller sees those big bids, stops selling, lifts the offer, right? Yeah, I love running equities, making markets in equities. I don't like trading them from a retail point of view. But we do teach people how to do it. That's just me because I like to trade the same thing every day. Now, some people like variety, and that's perfectly cool. Whatever floats your boat, we'll teach you how to trade it. If you want to trade it, we'll figure out a way to teach you how to do it. Right? It might take some time and you're going to have to be patient and all that nonsense, but eventually we'll put a business plan together that works. Now, what did I say about that overnight low? Let's go give that thing a love tap and see what it's good for. Right? What's that overnight low going to do? Are they going to front run it? See, that's front running. You see how we didn't get there? That's because Buyer stepped in, the offer lifted. Now it's going to break on the second touch. And now when we come back to that overnight low, look for the seller, right? If there's an aggressive seller, when the price gets up to a certain level, it'll get slapped down. You can almost imagine Dennis Rodman defending the basket, right? You can almost see that, right? Now, I like to let the big boys and girls work this area out because they have hundreds of millions of dollars and I don't. So if it accepts over the overnight low and can get over that standard deviation and you go long, remember that there's going to be sellers at 69. Okay? Maybe even earlier, right? That's why I love to let large traders work out these levels, right? It's like when the dinner check comes at a really fancy restaurant, you get alligator arms. You excuse yourself and go to the bathroom. Somebody else will pick up the check. You don't pick up the check here. Just you know, let the guy who put his Ferrari keys on the table, let him reach for his black card, right? That's a Vancouver lesson, right? It's true. When I was working in the business, oh man, you'd go to dinner and all these guys they'd pull up and they'd drop their keys on the table, right? So the guy's got the nicest car, let him pick up the check. Same with these lows, right? So if you are long on the look below and fail of 61 and a quarter, remember to sell into strength, okay? Do not wait for an invitation to sell in this market. Oh yeah, it was the end of the 80s, beginning of the 90s, right? Everybody was really showy back then. Well, they still are, I guess. I remember this one broker, he showed up for lunch once and he had just screwed everybody on a deal. He made himself about, I don't know, 15 million bucks, which was a lot of money back then. It still is. And he pulled up in a brand new Mercedes. He's wearing a $50,000 watch. Man, we stuck him with a big, big bill. There, we got a seller. Oh man, can we stay off of that overnight low? Right? Working this level out with this kind of order flow, very difficult. Right? It's jumpy here. Right? I don't mind saying that I'll leave it alone. How long do I wait for a look below and fail? Well, I was thinking about buying it there, and good thing I didn't because the price started jumping around like crazy, right? In this kind of a market, while it's really, really volatile like this, I will trade less. I will trade less and I will trade smaller. There is no reason for me to go blowing myself up. I love to trade Globex. I know a lot of older traders say to stay away from Globex and scream and yell, but I find Globex trading a lot calmer, a lot smoother. Sometimes it's slow as hell, right? That I admit that, right? But right now we got sellers at 64, 65, right? So if you're going long here, you got to remember that those sellers are still there. You're okay as long as we hold that overnight low. If we break that overnight low, we're in trouble, right? And once again, if you are long, please put your sell orders in. If you're short, put your buy orders in. don't take anything for granted in this market. Yeah, it's not ideal for us. Sometimes business conditions are good for us. Sometimes they are not. You know, if I was a new trader right now, even as an old guy, I'm like, yeah, if I bought this at 63, I'd be selling it here at 67, right? I'd sell into that strength, right? It finally picked a bid and finally, man, and what happened was enough people shorted it under 65, but they all went to cover at the same time. Bingo, big green candle, right? Big green candle when they go to cover. Whoa. And we should rotate up to about 76. But hey, if you were long 64, 65, you should be out into the 72s. Please pay yourself, ladies and gentlemen, in this market. Please, please pay yourself. So, what I like to do on a traditional look below and fail, right? This one was hard. You don't know how to trust Globex price action? Does it really hurt you that bad? I would suggest you work at it. The reason you don't trust the price action is that you're not familiar with it. You just got to do the work, Sing. That's it. You just got to put in the work. Come hang out with us. We do a Globex session at 7:30 in the morning UK time. We'd be happy to have you. Can I explain what a V-shaped recovery is? I would love to. You're experiencing one now. It's kind of more like a U. If I squish it together like that, it'll look more like a V. But that's basically what happens is you have liquidating traders liquidate, short sellers come and bid the market under 61, wholesale builds a position on top, and then when supply runs out, the market rotates higher and we sell into the retail flow for profit. So what happens is the shorts come in and cover here, wholesale builds a position, we start going long, and then the people who shorted down here under 64 realize that they're screwed. They all go to cover at the same time, and you get these big green candles. That's what creates, or the mechanics of a V-shaped recovery. And don't worry about trusting it. It's the same business. It's not like one day we're selling apples, the next day we're, running a body shop, the next day we're running a massage parlor, the next day it's a liquor store. We're always selling the same thing, Sing, right? You just got to be familiar with the product. This chart that you were looking at is just a sales chart. Tells you how sales are going on a minute by minute. That's all it is. Here we're selling ES contracts. We could be selling coconuts for all that matters. Doesn't really matter. Yeah. You have to trade what you're familiar with, and also you have to trade what you have the skill level to trade, right? I love trading Globex because it's nice and slow and you can relax. Sometimes, if I'm very well caffeinated, I love trading RTH when it's volatile, right? But if I'm feeling off and if I do some test trades and I'm not on the ball, I might just not trade RTH to preserve capital. right? There's a couple of things in this business. One is that you got to take your ego and you got to put it in a box and kick it a long way away from you. You have to admit you're wrong early. You have to admit if you're slow and you're not trading well. You have to admit if you're missing things. You can then go back and work on that, right? And adjust and tweak. But you're always working on that, right? You should never go, oh, I'm great. You know, I just lost $800. Keep at it. No, that's telling you you're doing something wrong. Admit you're wrong. Admit you're slow. Have some humility. Humility is the greatest form of capital preservation. Nice trade, Aubrey. Beautiful. 3 from the 60s to the 70s. Now you can just chill. Now you can go to the beach, right? Make your daily bread and get the hell out of the casino, right? Humility is something this market, my God. This is the business where as soon as you pat yourself on the back, you get a swift kick to the nads. That's why every time a trader buys a Rolex, they have a bad month next month. It's the Rolex effect. Learn that one the hard way. It's true. Those things are bad luck, man. That's exactly why I have the levels, JT. See, like right now, I see the offer lifting over 76 and 3/4, but then it comes down. There's a little bit of chop as we're cleaning out 76, 77, right? That's why I have those static levels, right? That's why I do the balance level so I can watch the order flow at that level, right? I don't really watch the bid, I watch the offer. The bid will follow the offer, right? Just like kids chasing an ice cream truck, right? When the offer comes down like it is, we've got competitive selling. Right? If we have competitive selling under 76, see, we don't. We came down to 76, found buyers, and moved away from them. This is not a weak. Oh, it's a poor low. Thank you for pointing that out, Nigel. One tick of excess. That's a poor low. That's a regular low. That's what happened when buyers were competing. Now, how did I miss that? Where's all the people in the room were supposed to yell out poor low? This was on a trade desk. I'd be throwing bananas at all of you. Right? When you see a block, you're supposed to yell block. When you see a poor low, yell poor low. Right? It is a poor low. We had buyer competition down there, which made that look below and fail of 61/4. That's what happened. You get that big competition. Now we're in distribution, right? We're taking this cheap crap that we took in here and we're selling it. If we hold price above 76, guess what? That's going to bring in buyers and we're going to rotate up. But if we don't get the order flow, we're going to have to go put the market back on sale. You read the offer on every move, JT. Good light bulb moment. Beautiful. Right? Every time a retail trader makes money, a market maker gets his wings. That's all it is. So now distribution, we're running out of clients. We're going to have to put it on sale. Can we hold 72? Or do we have to discount it under 72 to get rid of our inventory? Because they can sell it all the way back to 64, right? If you drew a little volume profile, right, just on this move, you'd see we're taking this and we're selling it here, right? But if we completely run out of buyers, we will bring the market right back to cost basis, right? Yeah, if you're short off of that 76, your stop's here, but Yeah, I hate this. These big candles sometimes are a bit of a pain. The offer is moving lower to capture the bids. And then as soon as it finds large bids, it'll run away. It'll run away from you like the pretty girl at the high school dance, right? As soon as it sees people lining up, it'll move higher, the offer, to make them pay more. There's 84 and a half. That's the problem with the shorting. See, the problem too with this market is sometimes just when everybody gets short, that's when the supply runs out, right? But it's okay. The other thing too about this market, folks, is we are going to get some cuts and bruises. Okay. When there is volatility, trading is a contact sport, right? You are going to get punched in the face. What we try and do in our micro E futures room is train you what to do when you get punched in the face. How do you react? How do you manage your positions? How do you know when to get into a trade? How do you know how to get out of a trade quickly without thinking? How do you know if the trade's not going to work? And more importantly, how do you know when not to get into a trade? That's what they don't teach you, right? They never teach you when not to trade. Everybody just wants you to trade and generate commissions. But we want to teach you when it's good to do business. Now let's see if we can hold 80 on the retrace. Let's see. Nice work, Hex. I'm a big believer in making your money that day and getting out. Now, that's for most normal people. Now, people who want to trade for a living, of course, if you have an edge, you should be exploiting it and developing it, things like that. But some people don't have time. Some people have kids and hockey practice and all that sort of thing. So if they can make $500 to $1,000 a day, that totally helps their income. Even $300 a day over a 20-day trading month, right? I like to trade for income, not glory. If I want glory, I'll go do a short squeeze and I'll squeeze a stock from 50 cents to $500 a share if somebody gives me the opportunity. But retail trading, make your money, keep your money, right? That's my motto. Make your money, keep your money. Don't give it back, right? So we ran out of supply at 80. The offers are now above VWAP. So now here's the goal, right? This is the wholesale dream. The wholesale dream is now to take this and sell it here, right? To take this and sell it here. Now that's only if the order flow supports. If the order flow doesn't support, then we got to bring it back, right? We got to put it back on sale. But if we coax enough buyers in from this move up, right? Because remember what the old guys say, price is an advertising mechanism, right? So people love to buy something when it's moving up. So if enough people come in, we'll be able to do this. Go back to this area and just go back and forth, back and forth, back and forth, back and forth, and get rid of this product. Right? That's how wholesale works. Ugh. Let's see if we can hold VWAP. And our trades are just based on the fact that we find a place where supply runs out and you buy a little. Right? There's too much supply, you short a little. Now that we're back up over 84, what are we going to do? Look below and fail of 84? Let's see. There's sellers at 92. And the other thing too is if you take trades and they don't go well, right? If you're a newer trader, after each stop out, just kind of stop for a second, think about it, journal the trade, see what went wrong, right? Sometimes you could be completely in the right and a stray order comes and takes you out, right? And that's just the business that we're in because we don't control the order flow. If you stick to your method and you stick to it doing it over and over and over again, right? Once you have a proven, like the look below and fail, the look below and above and fail, those are proven trades. The other thing is that you can build those trades out, right? They are scalable in time and size. Now we're looking for 98. Remember what I said? We're going to take this and we're going to sell it up here. This is distribution, okay? This is the accumulation of product. This is the distribution of product, okay? And that's why we call it a market, not a hot tub. You guys are quiet. Everybody must be trading. What I love about futures too is that I can trade Globex, I can make my daily bread, and then if I'm busy, if I'm doing calls or teaching or we do the one-on-one mentoring, then I don't feel like I have to push myself and force trades. Ah, why up there? Why can't they sell above? Because they're dependent on order flow, Muhammad. That is not a stupid question. There's no such thing as dumb questions when it comes to your money, okay? The reason that they're going to sell there is it's 2 times the cost basis area, right? So if you buy something for $1 and you can sell it for 2, you try and raise the price to 3 and nobody wants to buy it, you want to unload your inventory at 2, Muhammad. And the other thing is there's not just one person selling up here at 96, 95, 94. There's thousands of people in this market, so there's what we call competition. You got to sell where you want. Same thing with shorts. Everybody goes, "Well, why don't the shorts wait to cover lower?" Well, cuz somebody else is trying to buy 10,000 contracts and they're taking up all the supply. So that's that level of competition. If there's anybody who's good at programming VR, reach out to me. I'm working on something where I'm going to put the trader on the trade desk, let them trade a 5 million share order, and you'll understand so much more about markets once you've traded out some size. Then it makes retail more, it flips on the light bulbs, right? Oh, that's why that's happening. Oh, that's why that's happening, right? Well, I'm using cost basis from 61 to 76 right now, right? And we're disposing it 50, at 88 to 92, right? So if I drew here, and this is helpful, right? If I went and drew a volume profile from the top of that move to the bottom, right? Watch. As the market, this is kind of cool. Check this out, right? As the market starts to liquidate, look at the volume. It builds out there at 84. Those people get trapped, sell, builds out there at 76. And then look at the volume under 69 as I move. Look at it. It's growing, right? And then as soon as we get here, this is the first distribution. That distribution brings in buying, right? See how you're getting rid of your product? See? And now we have distribution. I had this one guy that I used to work with. His name was Addy. He'd always call me, and he was a great promoter. He could move stock like crazy. They'd be always call me up, JJ. We need big distribution. Yeah, Tom, we're gonna do a price action lab. We'll do it at 11 o'clock. We need big distribution. Oh man. That's when I actually ended up producing a music video because all the money that we made selling the stock of his, he took and put into his music video, and we didn't even know it. Oh man, JT, stick with me. You'll be surprised how much information a simple candle chart will tell you. Now, I'm not knocking technical analysis, but there is so much more to these candle charts than meets the eye. They give you so much information, right? They give you so much information that nobody pays attention to. And after a while, when you know what to look for, JT, it's hugely beneficial. I don't use volume profile. I use it as a teaching tool, right? To show what happens when the market liquidates, how that liquidating product is taken into wholesale hands and then redistributed higher into the retail flow for profit, right? And what I do is I use these zones and they help me. So I know that two times the green is two times profit. The purple is four times profit. The blue is a cost basis that I got, let's say from here, right? If you come into the futures room with us, we've got a 7-day free trial, not to keep pumping it. Come check it out. I promise we'll teach you some things that are useful, right? I like to call it blue collar trading. We like to make our money and go home, right? Because really, who wants to sit and look at a screen for 18 hours a day? I mean, I've been doing it for 33 years. It's not really the healthiest thing to do. Make some money, go for a walk, do normal human being stuff, you know. I remember I never took a holiday from 1995 to 2022. What kind of price action below the low invalidates the LBF? if the offer is moving lower, Mr. Meteor. See, there's been sellers here all morning. Look, here, 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 right? So say you were long 88. You know, once you get to 5,600 and break it, when you get up to that 5,603, 5,604 level, they're going to come at you, right? Oh. Oh, one last question. Have you guys heard, like, when I'm on Zoom, have you heard a hum or any kind of weird noises? The reason is my girlfriend bought me this treadmill, and it's under my desk, and I'm walking while I'm talking to you guys. It is. If I'm breathing heavily because I'm trying to do the 10,000 steps. So as long as you guys can't hear the treadmill, it's okay. Ugh. I don't know. I just started doing it a little while ago. It takes me a while. Where am I at right now? I'm at 6,500. I got a ways to go. Yeah. That's what happens when your girlfriend's a doctor. They stick all these things into you. I'm in Liverpool. I'm in the great city of Liverpool in the UK. But I grew up in Canada. Yeah, I'm in the UK, in Liverpool. Jersey. I miss Jersey City, where I used to go visit all my market makers. Oh, you're from Quebec. Salut. Bienvenue. That's it for today, folks. Shut her down. Folks in the coaching class, I will see you in half an hour. Thank you for putting up with all these little technical snafus. I appreciate it. And for folks on YouTube, thanks for joining us. Come visit us at microefutures.com. And remember, trade safe out there, okay? Be safe out there, folks. And, somebody put something on my YouTube as a comment. If you guys are having trouble and things are getting bad and things are starting to get dark, please reach out and DM me if you need to talk, okay? It's a tough business, and we want to lend a hand if everyone's having a really tough time, okay? Thank you. Have a wonderful, wonderful day. We'll see you all tomorrow. Bye for now.